This is Craig Haugaard with your Financial Issues Ag Update. Corn traded both sides of the market yesterday. We saw some pressure come after the U.S. good and excellent ratings were a touch better than expected. Good to excellent rating of 62% this week. Some traders were quick to note that 3 years ago at this time, corn was rated 61% good to excellent, and ultimately that crop came in at 104% of trendline yield. Supporting the market yesterday was another huge sale to China. This time we had a sale announced of 596,000 metric tons. China's never had a corn program of this size on this date in history. China's also never imported this much corn in a marketing year in history either. That leads to the question whether this self-sufficiency goals that the Chinese central government have established from its inception are going to be enforced, or if we're entering into a new normal with China. In the overnight trade, we have spot futures trading 2 cents lower. Beans experienced a two-sided trade on the heels of the crop condition report. Traders were looking for a decline of 3%, and that's exactly what the USDA delivered to them. While that was supportive to prices, we did see price pressure occur as a result of rains that fell in the central and western portions of the Midwest yesterday, and the forecast for more cool and wet weather in the 6 to 10 day outlook. The conventional wisdom seems to be that this may catch the tail end of the growing season and help soybean yield. In the overnight trade, we have a continuation of those weather concerns, with the spot futures down 6 cents as I record this. Wheat traded independently of corn and soybeans yesterday as it was driven higher by rumors that China was in for hard red winter wheat. Russian values backed off by $1 per metric ton yesterday, while here in the U.S. hard red winter wheat FOB values continued to climb. The southern plains should get rain over the next 10 days as remnants of the two tropical systems stir up storms. That should allow the winter wheat to get planted into favorable conditions. In the overnight trade, we have Chicago trading 6 cents lower, Kansas City is down 2 cents, and Minneapolis is 2 cents higher as I record this. Cotton futures continue to trade in a $2 range that they've been in for the past couple of weeks, with the December futures finishing 24 points higher, closing at 65.40. In the overnight trade, we have spot futures up an additional 8 points. Livestock futures were stronger straight across the board yesterday. October live cattle futures ended the day 17.5 cents higher, while October feeder cattle were up 2.5 cents at the closing bell. Lean hog futures had a solid session, with October closing $1.42.5 higher. Class 3 milk futures also turned in a positive session, with the October futures 41 points higher, settling at 18.27, and we're up an additional 3 points in the overnight trade. Meat cutout values were mixed. We had choice box beef 39 cents higher to close at $228.34. Select boxes were 57 cents lower as they settled at $214.75. Pork carcass cutout values were $1.92 higher. They ended the session at $74.54 per hundredweight. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.